Stock market update, and it's a very what you might call important week, not just because of non-farm payrolls, but also just generally given the direction of the market's been going. Now, as ever, we start off with price earnings ratios, and as you can see with these, energy cheap as well. Well, how does that weigh in with the rest of the market, and does it mean that these are things that we should be looking at in any event? Now, as you know, I will not just look at the charts. I will look at valuation, growth, income of companies, cash flow, cash return on capital invested, momentum, and also Sortino average return versus the risk of missing it, outperformance of the market. Now, the reason for doing this is there are many things which contribute to the upward move of a stock. Valuation is one, but also volatility is something that you don't want too much of, even if a company's gone up. And we know momentum is another factor, growth is another, and so is cash flow, but they all need to be weighted because they're not equally important and their weightings are not stagnant over time. So just so you know, in the background, all of this is going on in these weekly updates, which you should find on my Telegram channel and on YouTube and also on TikTok. So where are we? Financials. This is just how things have moved. Didn't, despite being undervalued, move up much. However, the overvalued companies, the tech companies and Tesla and all of those did. Energy companies, undervalued though they are, didn't move up much this week. What about price earnings growth ratio, another measure of valuation, the share price relative to growth in profitability? Again, what's cheap? Berkshire Hathaway remains very cheap, and one or two of the banks, not much else. And that's reflected in the markets. They now really are using it as an excuse to sell off since the peak in July, where year to date the Nasdaq was up 44%. Now it's only up 34%, which means our ability to pick resilient stocks for the next 12 months becomes even more important because the tide is not rising. S&P 500 is only up 10%. It was or had peaked at double that earlier this year. So what does that tell you? Well, it tells you some of my great investments program students have within the first 7 months of the year. Those who are Nasdaq heavy have, some of them got pensions which have increased 100%. Those who were S&P 500 heavy and were up 20% on the index, obviously cherry picked out of that and are up about 40%. The vast majority will be somewhere between those two numbers. And of course, it's been a lot more tricky since July, but we're hand-holding and helping everybody through that period as well. As you can see with the S&P 500, still skidding along that downward trend. Yes, we are in a downward trend. The upper chart there is the stochastic, which tends to be a bit more sensitive to price movements. It's a measure of momentum. The lower chart here is the MACD, which tends to be more important, but a little bit slow. We don't use these the way the textbooks do. I never have. Okay, so we should get something of a bounce up there. However, that's oversold and suggests more headwinds. October, 50-50 chance of going up. A hell of a lot better than September, though, thankfully. This monthly MACD is the most important one to me. And that is now starting to move downwards, which is negative. If it's moving sharply upwards, that's positive. If it's moving downwards, that's negative. If it crosses beneath its own moving average, i.e. the yellow line, then that's really negative. It hasn't quite done that yet, because then that would suggest it's going to be a period like this. So be careful of any upward moves. I don't think they'll be long to last. We really need not just a move up there, but a move beyond this period here. So what does that mean for our individual picks? Well, by the way, just looking at the FTSE, and I've been saying it for months now, that's the direction, and I feel it's going to fall off more. So let's look at individual stocks, and that way we learn more, don't we? Well, you've got a bit of a support there. You know you've got a support because resistances often become support. So we know there's a support there. Now, if that breaks below that, we're worried. Is it going to break below it? Well, monthly stochastic is pointing lower, even though weekly might give some support, but that tends to be the least important of factors. What worries me is we are now, yes, indeed, at this point which we were before. And when that's happened before, you did get a fall below support there and you move sharply low. Yes, you did have a recovery, but I don't generally like to hold stocks where the monthly MACD is falling below its own signal line. Now, it might not do that. It might just do what it's done here, which is just tease us and kiss along and then just keep, moving upwards and sideways. I do not know what's going to happen. So what would I do with Apple at the moment? Well, if you put a gun to my head, because I like the company so much, I would probably dollar cost average. But if you didn't put a gun to my head, I'd wait. What would I do with existing holdings? I'm still holding. I'm not looking to sell yet. Okay, so there's your Apple. And by the way, when you're looking at all of these, just a reminder for those who haven't been following me, and if you're not already on the Great Investments Program, you know what I'm talking about. And this is just a brief overview. Those on my program will get a far more detailed broadcast on the private Telegram channel, of course. Have a look at alpeshpatel.com/links if you're not on the Great Investments Program. So that's Apple. That's where we want to get to, is the average of what the analysts think, which would give you about a 13% to the upside. That's not really the reason I'd be doing it. And this is just there more for information. I'd be doing it for a longer term holding, of course. Let's have a look at some of the other bellwethers. Well, Alphabet's holding up a little bit better, although the weekly, the solid blue line, MACD is lower. This is still a rising, and as long as that's rising, I am positive on it. Now, can Alphabet really go upwards whilst Apple falls, which might give us a clue that Apple might not indeed fall? Okay, so that's positive on Alphabet, right? Microsoft, very similar to Apple in many ways. It's at a support. This is sideways. It's not falling, but it's sideways. So a little bit more positive than Apple is, but this is set to move lower. At the moment, I continue holding. Put a gun to my head, I'd dollar cost average in over the next 4 months. Would I sell? No. Would I buy more? I said I'd dollar cost average. And that's really my view across most of these. So I'm going to call that the Microsoft view, okay? When I have it just as shorthand. That's what the analysts think will happen in any event. There's your Amazon. And again, with this one, I'm going to take the Microsoft strategy, right? Which is the Apple strategy, which I've already told you. By the way, this is what the banks think. They all think buy, buy, buy. October and November are not too bad. September's bloody awful, and indeed it was. But it's behind us now, isn't it? And I told you it would be awful. So you got all those wonderful insights thanks to me. Now, this is just doing what it did last week, and I'm not going to repeat myself from what I said last week. You can watch last week's video if you want to know my views on Disney. As for NVIDIA, overbought, you still remain in that problem. What do? Do you buy more, which is slightly higher risk given that it's overbought? If you're risk averse, you don't buy more. If you're risk neutral, you might either, well, you take the Apple strategy with it, wouldn't you? Okay. And if you're risk averse and already holding it, you might not sell, but you might say, well, if it drops 10% from here, I'll sell 50% of it. If it drops 20%, I'll sell the rest, and so on. You'll work out how much to sell based on how much it drops. And if you don't want to be that proactive, you'll just say, no, I'm just buying and holding this forever, where you give up some great years, right? So that's the reason why people sort of do try and monitor their portfolio maybe once a fortnight at the very least. That's what the analysts think anyway. Tesla. Yeah, well, this was a special situation. We got into January, so we're sitting on some good gains, and I'd again have the Apple strategy with this one. Okay, Meta, again, I'm going to go with the Apple strategy or Microsoft strategy, which I've already explained with this one as well. And ServiceNow, similar. Look, you can tell from those patterns. I'm going to continue having the Microsoft strategy with that as well. And Cisco, same thing, Microsoft strategy. You notice how you can get a lot of complications simplified, and that's our approach in all of this. I hope you found that very useful. Have a look at my campaign for $1million.com, also alpeshpatel.com/links. And the reason for that is if you want to join the Great Investments Program and know how to invest the way I invest, then that's the place to go. Thank you all very much.